So 10 years ago, I started investing without any sort of plan. So I traveled the world via the RAF, which is mental in itself, but I then became addicted to investing due to the fact of boredom. I'll probably explain all this in a bit. And yeah, along the way, I made some horrific mistakes. I found Bitcoin. I discovered dividend investing, which is what this channel focuses on. But I have also built a load of rules that keep me on track in terms of investing overall, which I've developed for years. So I'm going to showcase and share that framework and what I'm doing today in 2025. If you like this sort of stuff, please do leave a like, comment, and subscribe. Let's get into it. I got involved in investing when I was in the Air Force. I was actually traveling quite a lot. I did a specific job where I was always in and out of the country doing a lot of protection work. It was good. I really enjoyed it, but there was a lot of traveling, a lot of sitting down, doing nothing. And I used to listen to a lot of audiobooks back then. And I also learned a lot from other people, especially older than me, because I was quite young. I'm quite young, realistically. And I actually first invested in Nutmeg, okay? And I had decent money for my age, no responsibilities, no kids, no dogs, no house, no whatever. But I also wanted to make more money and understand that, when I had sergeants and flight sergeants and stuff like that say to us young lot, try and have some money because you haven't got a pot to piss in when you get old. A lot of those did ruin their kind of wealth away because they kind of just got pissed a lot and basically threw it up the wall, which made sense if you're in that environment, especially with war. But as you can imagine, my curiosity got the best of me. I learned more about money. I learned about inflation. And in 2016, I bought Bitcoin, which is that bloody thing up there. And that was my high risk play. And as I say, I didn't know what I was fully doing. And I learned a lot about it in a short period of time. Then I got into altcoins. And honestly, my life has changed unbelievably since that point. And it has changed. And I've been basically a full-time content creator since I left the Air Force in 2018, which is a long time. But I learned about time, valuing my time. And time is the best asset we all have as an investor. If you start young enough, if you build a habit and just go with it, you have time. And I know a lot of people start quite late, but realistically, you need to try and start as early as you possibly can. Because going into full-time content creation and business ownership was a freaking hard thing to do, but I had investments that kept me going, which did help massively. And even throughout that time period, there wasn't much I was not investing. I still had some stock market exposure, not much, but I did have other things as well, which I will explain in this video. But my main focus realistically was making money work for me, the fundamental principle, beating inflation. And yeah, Bitcoin did that in an abundance, a lot. So as you can imagine, my overall goal is very simple: grow and, the one that people forget, protect your capital. Let's get into the main bulk of this. Now, the one thing that I just said there is protect capital, and it's risk management, right? Too many people, I can go so deep with this, I'm not going to though, just think they're going to get rich quick by investing. Oh, I'll open up a platform. There we go, I'm going to make rich. You listen to the likes of Warren Buffett, Charlie Munger. You got so many people out there that are really, really influential. And there's books on my shelf. The Psychology of Money is really good as well. One Up on Wall Street, Trading in the Zone. All these books really get you kind of understanding about risk, more to the point of anything, right? And in crypto, right, the goal that I had was to obviously make as much Bitcoin as possible. And the obvious pick was Bitcoin. And I lost a lot of money, hands down, a lot of money on altcoins. And I've made money on altcoins, I've lost on altcoins as well. But the main thing that kept me going was obviously Bitcoin over the course of time. In stocks, you could argue the exact same thing is the same thing, i.e. pick the obvious, which is an index all-world fund, right? And you've got clear and obvious dividend stocks that have been paying dividends for years, growing dividend, and they are quality companies that are bulletproof, i.e. they do not die in recessions, whereas you've got the 97, 96% of company stocks that are speculative and just die off and just do not do anything realistically, even though they may be a solid product under the hood. It's crazy when you think about it. But the one thing that I learned more than anything with the world of crypto, you have to accept maximum risk, but also maximum downside, because things will go to zero pretty quickly. And I know people have a different opinion on what crypto is in this channel especially, but Bitcoin's a little bit different to most things realistically, and it is a really good investment vehicle in my viewpoint. Obviously not financial advice, my personal opinion. But the idea is to keep things as simple as you possibly can. If you can't explain Bitcoin or an investment, so to speak, whatever you are buying into, whether you've had 6 pints at the pub or if you've had 2 hours sleep, it's probably too complicated for you to kind of get your head around. And that's a big thing. But one thing as well, and we talk about avoiding dumb losses and risk management, it's okay being absolutely borderline average about making money. Because we could have the argument about stocks and shares ISAs, we could have the argument about ISAs in cash, where you're earning 2%, 3%. The idea is to grow. And the stock market is an index that does grow over time. Individual stocks, especially ones with hype, often don't. But the average returns will always beat anything if you allow it to do it with time. 20 years in the All World Index will beat a speculative stock that you may be late to, which could actually go to zero. So what do I do? And obviously some of my rules here. Let's talk about the obvious in the room. The Global Index Fund, essentially. I have one, this. I know it's relatively new in my portfolio, but there's no point having more. There's no point having the S&P. There's no point having the FTSE 100. There's no point having the dividend one because they all amalgamate into different things. And you've got the most amount of breadth here in the market. And it just makes sense to put your money in here. Makes sense, doesn't it? It does. You got 3,592 holdings. It does very well. It's a decent fee as well, considering what it's got. And the volatility is actually relatively low, with obviously the weight of most of the companies all over the gap, which kind of what you want. And there you go. The returns are absolutely brilliant overall. And the next part you need to consider is tax efficiency, especially if you're in the UK. A stocks and shares ISA is the main wrapper for all of these that you can protect your investments by not paying tax on any of the capital appreciation and any dividends if they're UK related. By the way, if you do buy American stocks, fair enough, it's fine, but you do have a withholding tax. If you're interested, obviously Trading 212, there's a link below for that. And obviously as well, if you just want to focus on funds, which is important, by the way, for a beginner, there's a link below to Invest Engine. And as always, money can go up and down. It is risk, not financial advice. But the best bit of advice I can give anyone, which isn't financial advice, is just have it in an ISA because why not? It just makes sense. An emergency fund. I have mine in premium bonds. I know people are going to be like, what on earth are you on about? But I do have my emergency fund in premium bonds and I have had for a while. And this again is tax-free. You are subject to being a part of a draw. It isn't the same as making money every single month, but you can make money every single month. I think every single month apart from February this year, I have made money on this, which is quite nice. It's easily accessible. And as I say, like if you want to just compound this, you can make money and you can win stupid amounts of money. I know it requires luck, but have an emergency fund. If you're not financially secure in your own life, you shouldn't be investing realistically. You should have your own house in order, have an emergency fund, and then start investing. Build that habit over time, which is the next point. Now, as I say, consistency matters. Reinvestment and building a habit. And it's obvious, but this is just a random DCA thing where you can showcase how over time your assets will increase. And that's the mental thing about this. And realistically, when we're talking about this, right, I know it's nothing amazing, but at the bottom end of this, even with an annual growth rate of 8%, which is on average over a 20-year period, the amount that you put in is going to be a lot more because of that growth, especially if you're reinvesting it. But the main point of this is creating a bit of a habit, kind of like paying your water bill, for example, right? Or your electric. Stand in order. Set it up to your pension, for example, set it up to your premium bonds, set it up to your ISA, or anywhere else you need to put it and let it do it, where it kind of comes out like a bill. Dividends. I've known about this for a while, and I've got to a point in my life where I want to do it. And this is what I'm doing. If you're following along on my channel, I want to get to £1 million by the age of 50. It's a hell of a stretch and it will be quite boring, but I'm hoping it shows. But the one thing about dividends is to grow income and sticking to quality companies. I use this website here called Snowball. There's a link below to this, by the way. There's 30% off currently. Really, really good, and a really good platform that will help you track your dividends and hopefully stay on top of the news and the information around them. But with dividends, when you reinvest those, and that is quite important, by the way, it will compound and snowball, get more and more aggressive as things go. The downside to it, obviously, you do have to have individual stocks. So I have 40% of my holdings in the All World Fund and 60% of individual stocks, which are split out into smaller risk points, which makes some sense. And when I showcase this on here, so if I go into like diversification, for example, you can see that I have splits. So if one of them goes belly up, it is going to hurt, but it's not going to kill me, if that makes sense. That's the whole point of risk management. And over time, I will add to those companies and I will build a bigger portfolio and I will get more and more dividends over the course of time, and they will grow and snowball. And obviously as well, if that Vanguard All World Fund gets crazy, I can rebalance it and more money will go from profit into those stocks, and I will grow my income as I get older. Screening. This is important. Now, I'm using a platform called Stockopedia. This is a fantastic platform that will help you in research. If you want to buy individual stocks, which is a lot harder to do, by the way, so no one's a Charlie Munger or a bloody Warren Buffett, for example, you need to kind of get some information. And that information will tell you if a company is healthy or not. And people will go for the unhealthy companies because their prices are speculatively rising like crazy, right? Now, what I look for, and I've talked about this before in my previous videos, I go off the QVGM rank, which is basically quality, value, growth, momentum, right? Which is a really, really strong point in terms of my portfolio. There's not much that I can say other than the fact that they are the obvious, realistically, for what I want in my portfolio. So to give you a random example, this is Halma, a dividend compounder, good momentum, a quality company, and the value is actually on the 9 scale. Why? Because it's probably overvalued in terms of price. However, it's got a good growing dividend yield, and that is important, and all the numbers stack up. You are buying a pretty healthy bloody company, basically, and that's what you need to do. You need to pick somewhat the obvious. Don't go for the speculative stupid, because you will get burned. Fees are hugely important, by the way. I'm just going to say it right now. Now, obviously, everyone's different for obvious reasons. You want to aim for lower fees. Now, I do a lot of my investing on Trading 212 just because they are pretty low. But some companies have flashier platforms. They're not very good. But you don't want to get stuck into a monthly subscription, for example. You don't want to get stuck into the ISA fees. And you can see over the course of 20 years, you could be losing 14, 22, or even £32,000 if you have a certain number in your portfolio, if you are dollar cost averaging over a course of time. I know it's mental numbers. You may not ever actually get there, but you get the point, hopefully. Don't go crazy on them. And these, by the way, can get a little bit worse if you're on the life plans or, on the management plans as well. These have got a fee here, and it will help you in terms of if you are an absolute beginner, but there is other companies out there that do offer worse fees. Again, link below to Invest Engine if you are a total beginner, because that's probably the best place to start. Automation. I've already mentioned it. It's good to have standing orders going in, but also one thing we're Trading 212, if you're holding it into a pie, you can automatically, reinvest your dividends. Even this morning, 2 of my dividend payments went straight back into my portfolio today. So I've added to my pot, which is quite nice. Rebalance it as well every now and again. But more importantly, every time you get paid, you want it reinvested back into your stocks, and it will help the compound. Buy-in discipline. You need to buy more on the down days and less on the up days. So a lot of people, for some reason, and I said it before in previous videos and stuff, they will look at the stock market and go, oh, wow, why is that doing like a 45% pump? Well, the reason being is it's dead, literally. Look at the state of it. And people will get kind of, fixated on, wow, I should be adding my portfolio to some of these green, beautiful things. And they will end up in, obviously, this is an extreme example, but they will end up in the headlines because of growth. But the next rule is obviously FOMO. FOMO and buying discipline come at the same part of thing. I couldn't give a monkeys if I missed out on 45% over the course of 24 hours on a stock I've never heard of, right? That's just me. But some people will. If you get into Discord groups and communities, or onto even on the community side of Trading 212, you will get FOMO, like, oh my God, he's made a load of money. I want to make loads of money too. And even this morning, right? I'm pretty sure on this feed, there we go, I've seen it here. Look, how many people would look at that and go, I want this. Why has my portfolio not done that? Why have I not made all this money? And all of a sudden, you can see other people sharing those. And then all of a sudden, people will start looking at certain things thinking, how can I get FOMO's kicking in and start getting a bit twitchy. Recency bias, and FOMO will ruin your portfolio, especially if you don't know what you're doing. So there we go. I do share my dividend portfolio across this channel, and yes, there is risk involved, but I'm pretty confident if I do what I said I will do, I will hopefully get close to that goal that I want to get to. Obviously, certain things can happen, certain things can change, goalposts can move. But more importantly, let's talk about the obvious. On the screen here are the list of my rules. Nice, punchy, sweet. Feel free to pause it and write them down. But more importantly, kind of make them fixed to you. If you do not have a plan, you may fail completely. You got to have some sort of plan, realistically. And if you're not yet done so, please do watch this. This is the beginner's guide to a lot of investing stuff and a lot of content you can watch on that playlist.